You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. And today and all this week on The Biz, it's September, Life Insurance Awareness Month. And today, leaving a legacy for generations to come with #1 author and industry speaker, Tom Hegna.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm Steve Savant, your host. We're broadcasting live to a nationwide audience of financial professionals right here in Fountain Hills, Arizona, home of America's largest fountain. And day 2 with #1 author on Amazon.com on retirement and national MDRT platform speaker, Tom Hegna. Hey, Tom.
Hey, Steve. Great to be here again.
Welcome to the show. Listen, we're talking about life insurance, my wheelhouse. I love this. And what a topic today. Even though we think the unified credit is $5 million, who needs estate planning, who's looking at second to die, I'm telling you, we're doing business in areas of legacy planning, whether it's children, grandchildren, and now I have to add another one to your plate, Tommy, great-grandchildren. I'm sitting there, I'm 10 years out. It's reasonable that my eldest grandson, think about what I'm saying, will be 23 years old. He might marry. I could be a great-grandfather. I mean, just the thought, we're living longer. Think about this. I saw the Guinness Book of World Records. That gal just turned 116 2 weeks ago, right? Now remember that the all-time died at 122, right? So 116, and we have maturity dates on contracts going out to 131 on life insurance. So is it conceivable, Tom? A legacy for my children, a legacy for my grandchildren. Oh my gosh, now we're talking a legacy for what? Great-grandchildren.
Sure, and you know, in the book I talk about a couple ways. We talked in previous sessions about lifetime income annuities, that you can actually have income going to grandpa, grandma, the son's wife, the grandchild, the grandchild's wife, the great-grandchild. So we can have income go by using lifetime income annuities, but with life insurance, that is a great way to leave a legacy. I think of so many seniors, and I'm thinking widows and widowers and even, grandparent couples. CDs are paying so little. You know, the average CD is paying less than about 0.5%. Even if you add 2% inflation, they have a negative 1.5% a year. And I remember this grandmother I'd sat down with, she had about $100,000 sitting in a CD. She said, Tom, I don't need this money, but it's there if I do need it. But what I did was I named my 6 grandchildren's beneficiaries of my CD. And so when she dies, they'll each get like $16,000 some dollars. I mean, that's a nice grandmother.
Sure.
But as she maximized what she could do, there are life insurance policies right now that she could move that money from a CD to, say, a single premium life insurance policy that pays higher than the CD, grows tax deferred. If she names her 6 children as beneficiaries, they'll get 3 times what they're going to get if she had it in a CD. So I think there's a tremendous opportunity for advisors to talk to older people who have money, just in case money, that they could just shift into a life insurance policy to leave even a greater legacy.
When you think about the leverage we're getting off life insurance,
that's the key, is the leverage.
I'm blown away. When I got into second to die back in 1990, a male, female, 65, both preferred $1 million worth of coverage. That was a $25,000 guaranteed premium. Today, I can, for the same coverage, for the same health considerations, I'm sitting at somewhere around $8.5 to $9 grand. I mean, think about that's how much
and
has
think
changed.
About interest rates were so much higher back then, they're so much lower. That just tells you how mortality has changed and that people are living longer, and the projections for people is to live even longer. And that's why it's so important that people have guaranteed lifetime income, like we talked in our previous shows, but it's also, it can devastate people if they don't have enough life insurance and they don't leave the legacy that they want to. The chapter in my book on estate planning is called How Will You Be Remembered? I was going to title it, How Do You Want to Be Remembered? It doesn't matter how you want to be remembered. How will you be remembered?
That's good. We were talking before we went on the air about a death claim that I saw. I'd never seen one like this before, where they paid out all the disposition of the estate went to their children, the charity of their choice. We'll get to that in a little bit. But he had $1 million to start a business at his death. To start a business. And he already had his people that he wanted to hire. Everything was done. Nobody knew it. When they went to the attorneys for the state distribution, here is this platform of $1 million to fund a business. He just ran out of life. He still had ideas to do. He, from the grave, started a business, an LLC, at his death. I never heard anything like that.
You know, that's the power of life insurance. And it's life insurance, I call it, the chapter in the book on life insurance called the miracle money machine, because like I said, if you had a machine in your office or in your garage that kicked out $10,000 every month, would you have insurance on it? Would you protect it? Would you have a security system with cameras to watch it? Yes, you would. You'd take care of that machine. Well, we're that money machine. And so we've got to have adequate life insurance. And just a couple more statistics
I
here,
love
Steve.
these stats.
A 30-year-old couple will earn $3.5 million by age 65 if their total family income averages $100,000 for their entire careers without any raises. You've got to protect that miracle money machine. 43% of women have no life insurance coverage at all. And think about it, women live longer. And so, you know, this can, and now I just saw where over half the women are breadwinners in their families.
When you think about it, we've changed, our culture's so changed. Back in the day, now we're looking at dual income, no kids, dual income, raising kids. This isn't single income anymore.
Right.
It's dual income. And I've really departed from using spousal riders. We're putting full-blown plans on both dad and mom, because now when you're looking at especially if divorce would happen or whatever, we're trying to cover off every eventuality. But the power of leverage now is so great that the math works so well, and now we want to cover the gals as well.
And the power of avoiding probate, that it gets paid directly to a beneficiary. And Steve, we're going to talk about this when we talk about estate planning failures later this week. There's a pattern. And it happens to be multiple marriages, multiple children with multiple people. Those are recipes for problems. And that's where life insurance can come in, because you could have beneficiaries designated and policies designated to solve these problems.
Absolutely. Well, listen, if you want to see Tommy's book, just write an app with us. If you're the first app and you put in your remark, I saw this on your show, we'll send you this book and all the videos with Tom, which you can watch on www.brokersalliance.com or call 1-800-290-7226. When we come back, we're going to talk about legacies, generations to come with charitable giving.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Companies in our business are always touting service, products, and underwriting. And we do that too. But here's the difference. Now enter the world of the elite producer with a value package that cuts us out of the pack. A BD that approves social media marketing of non-FINRA products and doesn't take an override. With the best competition desk in the industry, and for our loyal producers, a true group health plan. No one offers that. Brokers Alliance does.
Well, welcome back to the Business Insurance Zone. I'm your host, Steve Savant. I'm with MDRT platform speaker and #1 author on Amazon.com on retirement, Tom Hegna. Hi, Tom.
Hey, Steve, great to be back.
Well, we're talking about leaving a legacy for generations to come. And I love my kids, I love my grandkids, and I guess I'm going to start loving great-grandkids. Wow, I can't even think of that. But now we're going to add another thing to the table, and people are going to say, Steve, charitable giving. I've heard it all before. Well, I have to tell you, we always think, well, our church or synagogue, kind of narrow-minded in our charities, or maybe we have a special, maybe we're the American Cancer Society or something like that. But I want to move to all kinds of places where we really see people who are entrepreneurs, who have very niche issues. And I'll give you the first one, then I'll let you respond. I saw this person who has art collection, and it's quite valuable. And they're with a nonprofit that actually deals in art. And because of their artisan ways, they want this to be perpetuated. We usually think of things like American Cancer Society, my church, my synagogue, things like that. But here's a niche area where they wanted the arts, their theater, to go on. And since it was nonprofit, they were able to do that.
Yeah, and I think life insurance can play a key role. And you know, I've sat down with so many people over the years where they want to do something for charity. And I remember this couple, they'd say $50,000 that they wanted to give to charity, but here's the problem. They were arguing because they each wanted to give $50,000. He wanted to do something, she wanted to do something.
Right.
And I said, look, I can solve this problem right here. We put the $50,000 into a life insurance policy, and it immediately gave them over $100,000 of gifting power. They were each able to give over $50,000. And so what I tell advisors is a lot of times when you're talking about charitable gifting, remember the life insurance companies can actually match Think about that. Match the charitable gift, and sometimes, depending on age, can do far more than matching. I'm just talking even in retirement with an older couple, they can match that charitable gift.
We just wrote a gal, 61 years of age, super preferred. She dropped 100 grand in. The actual death benefit, consider this, was 475 grand. Now think about the leverage on that and the tax deal that comes with making contributions to charity.
Yeah.
I mean, to me, that's huge.
And what some universities and foundations, some people want to get their name on the library, the Steve Savant Library or something.
I love the ring of that.
Yes. So some places will actually, if you sign the policy over, you pay the premium, it's a done deal, you name them as the owner and the beneficiary, that they will then count the death benefit towards whatever that level is in giving for the foundation, so that now you can have that wing of the building, you can have your name on the library. I just think when you paint a picture for clients, they want to do something. Well, wouldn't you like to have this library named after you? I mean, that'd be nice and there'd be a plaque there, and now this library can be funded the way you want it, with the books that you want and how you want it done, and they can do that by using life insurance and then transferring that policy to that charity. I mean, it's incredible, some of the things that can be done.
I have to tell you, sometimes a lot of our clients have big hearts and small wallets. They love their church, they love their synagogue, but they don't have the wherewithal, they think. Right. And we just did a case for a couple. We found out that they had $300 a month discretionary income. We bought $100,000 second to die on their life. When they both die on the second death, $100,000 will go to their church to perpetuate their beliefs after they're gone. They didn't think they could do charitable giving because they're thinking lump sum, or I'm not affluent enough, or I'm not really up in the opulent area of wealth. I'm just a regular person that has a big heart. I just have a small wallet.
Well, in the second to die, as you know, the pricing on it is so good that you just need a little bit of dollars to leverage a lot. And so if a husband and wife wanted to do charitable giving, the leverage that they could do, and again, that can be assigned and transferred ownership and everything over to the charity, and many charities will then count the death benefit as the amount of the gift for crediting for, your name at the certain level, giving level, or naming a building or something. And that's important to a lot of people.
Well, I noticed we had a little bit of a gripe with one of the beneficiaries. I have to tell the story because it's such a golden one, where we went ahead and we made this huge plan, our producer, and it was all done. And then the kids came in so that the parents could inform them all that they're doing so that they're aware of it. And the beneficiary said, the eldest son said, well, excuse me though, when you give this to the church, and I get that, Dad and Mom, that's yours to do, but now you gave our money away. And I said, well, what about replacement gifts? When you give your money away to charity, what about replacing those for your own progeny? Talk a little bit about that.
Well, and life insurance is perfect for that. So if you give money to charity, you could do a replacement for your estate by just using life insurance. And by doing it, you can get money out of your estate by giving it to charity. And you can keep it out of the estate by setting up an irrevocable life insurance trust, part of estate planning, and have the life insurance spring up at death out here outside of the estate, and you got money out of the estate through charitable gifting.
Tom, I got to say, before we get out of here for today, estate equalization. We got a lot of small businesses in America where maybe a couple of the children are working, but the other children are not. And mom and dad are trying to be equal. How can I equalize an estate for players that haven't been in the business at all?
Yeah, so that's a huge thing in businesses, and because they want to treat their kids equally, but you can't treat them equally, but you can treat them equitably. And you treat them equitably by using life insurance. So if you've got a daughter in New York and she doesn't want any part of the business, that's fine. You just have a policy that when you die, she gets this chunk that would equal a piece of the business. And then if the son or another daughter are working in the business, maybe they get the business. But you can treat them equitably, fairly, but you don't have to treat them equally. And if you make that daughter in New York part of the business, that could cause a huge problem when you're gone. So that's where life insurance can fit as well.
Well, I love your definition of not equally, but what?
Equitably.
Equitably.
Fairly.
Oh my God. I love that. Every time Tom goes on the show, I get a new spin line. I love those lines. Well, listen, you can watch our show all this week at www.brokersalliance.com. Just hop onto our homepage. As soon as you see the red button, just click on it to the archives and catch all our shows. That's the Buzz on the Biz for the day. You've been in the zone, the business insurance zone.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.